Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the February 17th stock market wrap up for you to use on my birthday tomorrow, February 18th. Let's go ahead and start off with, I guess, major indexes with the New York Stock Exchange. And I want to show you that the New York Stock Exchange is closing at 49.39, which breaks the January lows and the December lows that it was holding there for a little while. Still, I want you guys to remember that the last close, the low is 46.51. 46.51. So it is very close. And from the last lows to today's close, it's only 6% away. So we're almost there. Now, however, with today's 5% drop in the New York Stock Exchange, the short term trend is now down. And I still think that now even the sub intermediate term trend, if I can't find anything -2 or -1 going out here, then it's down. And it sure is. It's down now. So now, because of today's big drop in New York Stock Exchange today on heavier volume, the short-term trend is now clearly down, going back to anywhere in January, February that you pick. The sub-intermediate term trend going back to October is down. And of course, we are obviously still down on the intermediate term trend from June, July, August, and the long term trend from February, January of 2008, and the ultimate top in October of 2007. So it's still down, and one of the easiest methods I keep telling you to use is when the stock market indexes, the price is below the 50 and 200-day moving average, you stay out of the market. When it's trending above the 50 and 200-day moving average, you get long the market. Had you done that and then waited for a real long signal, you would have been out of the market, and the death cross would have happened. Let me go here. So the first time it got below the 5,200 and then confirmed it if you use only the 250-day moving average without using volume as a key or other leading stocks, no matter what, you would have been out of the market on, that's the day that the death cross happens for sure, right there. So on 1/8, you're done. You're out of the market on 1/8. 1/8 is your last day to even be long if you were long from 2002 to 2007 the entire time. So if you were long this entire bottom, or 2003 to 2007, you now got your full sell signal. And of course, that was on January the 8th. So had you listened to that from January the 8th till now, you would have avoided the entire downtrend, which is now taking a toll on it of -47% since then. And since the October top, the market is down around 50%, 51% actually since the top. Almost 52% the market's down in the New York Stock Exchange. So using the NYSE as your guide, short-term down, sub-intermediate down, intermediate down, long-term down. There's no reason to be long this market. The Dow Jones Industrial Average closed right at the lows, as you will see in November, 7552.60. 7552.29 was the lowest close. So we were only cents away of hitting new lows in the downturn on this one. So the Dow's quite obviously ugly, sub-intermediate and short-term. Let's look at the NASDAQ now. NASDAQ is still holding above the November lows, and I believe if I can find anything down only 1 or 2% in here, yeah, nothing there, so we're going to have to go forward. So if I leave October, there we go. So since 10/27 to now, the NASDAQ has still only moved -2%. To me, that's lateral to down. Short term, it's now down unless you use the January lows. And then you still have a basically a flat market. So there's just no way to be bullish on any of this. And I hear some people say, oh, the market's very oversold, a bottom's coming in soon. I want to remind everybody, once a market's oversold, it can stay oversold for years if it decides to. That's not up to you to decide when it's oversold. The market can go oversold and stay oversold for a year, 2, 3 years. If it wants to, it can go overbought and stay overbought from the time it shows irrational exuberance in 1998 all the way to 2000 and top. So use the price action with leading stocks to tell you what to do, not oversold or overbought indicators, which now says the market's oversold. Yeah, it looks oversold, but too bad whenever I look at a weekly, it looks like that we have another new downtrend just getting started. Look at the NYSE and NASDAQ. higher volume sell-offs, re-breaking down after a long time of drifting higher on low volume with distribution in it. So clearly, going back to the week of 9908, it has been nothing but straight ugliness. And from the top in the NASDAQ to now, we have a drop of 48%. So it's just ugly all over the place. And I can't understand why people are still trying to call a bottom. And even these beautiful charts come from Don Wharton. And if you read Don Wharton's notes tonight, you just got to scratch your head. How can you attempt to call a bottom when you don't have any stocks building max green? I want to go back to the bottom in 2002 and show you the Chinese stocks, just for instance, before the bottom. So the bottom came in October. So let's show you what September looked like. All right, so here's September for Sina, Sohu, and NetEase. Look at NetEase. Look at NetEase. Do we have any stock right now that looks like that in multiple industries? No, we only have one stock out there at all that looks like that right now, and that's AIPC. And that came from the over-the-counter bulletin board. And doesn't look nearly nice as now as NTES did in the 2002 bottom. So I don't know why anyone in their right mind is trying to call a bottom on this downturn. Why don't you actually wait till you get a real confirmation of a bottom before calling one? Right now, it just seems way too dangerous to be doing that for me. Anyway, let's go ahead and move on so we can maybe try to end this a little bit faster than what normally happens. I'm going to show you what China did today to see what it looks like in overall of its recent uptrend. Nasty intraday reversal for the Shanghai SC Composite today, but still overall big uptrend. So is the Hang Seng Index. Still short-term uptrend, sub-intermediate term uptrend. So that's much better than the United States right now. Look at China recently, and look at the New York Stock Exchange in February compared to China. So there's the NYSE, and there's China, which is becoming more free and which is becoming more socialist. I think by just looking at the chart, you get your answer on the short term right there. How did oil do today? Oil was down a massive amount back below 35, closing at 34.83. The 7% drop came after a 9% gain, so it basically is just refixing what it did the session before. Let's go to platinum. Platinum looking great, of course, as we said, as it broke out here in December. Since then, has been on an uptrend of 22%. Been looking good. Retook the 50-day moving average here in December, which was the initial buy signal, up 26%. Now the next buy signal is, of course, is the next time it's above the 200, excuse me, and then when the 50 crosses the 200 for those that simply use the moving average. However, platinum looks great. Look at the relative strength line going back till November, and I think it's clear to see that the relative strength line is telling you that platinum is one of the leaders. Along with them as a leader is clearly silver. Silver is extremely bullish, and since it retook the 50-day moving average in December, it's now up 38%. And since the clear bounce relong definitely add more to signal, it's up 25%. Then since it's above the 200-day moving average, if you went long there, you're now up 4%. So overall, you can see it's clearly working. And silver, of course, had a very bullish session today, up 3.52%. And if you look at the relative strength line going back to September, I think it's obvious which market is leading. And that leads us to our gold right here. And as you can see by gold, if you would have taken along with the move over the 50-day moving average, you would have had to cut your loss. But then after the next move above, you would have gone long, and now you have a 19% gain in gold. Since the breakout over 200 failed, you had to give back some of that, but it bounced right off the 50-day moving average here. Since then, up another 18%, so you took that gain, and then it took out the 200-day moving average here, and since then you have a 13% gain, and then you had the golden cross when the 50 moved above the 200 on 12/12, and in 2 days you now have a 253% gain from there. Actually, you would have gone long here. So you would have a 3.32% gain. So once again, gold is working, but still silver's making you more money. However, look at silver and gold both. I'm going to go to relative strength line, extremely bullish, and even look at platinum, very bullish. So that's where it's extremely bullish at. Now, how's the dollar holding up? Quite fine, thank you very much. Which just goes to show you it's the strongest of all the weakest. Now, as you can see here, we have a new closing high. I believe at 87.59. Bottom line is, everybody tells you should be short the dollar, and even I'm very afraid for the dollar, the way that we're going to print them like magic from a printing machine. We're just going to turn it into paper. However, you got to wait for your signals. Had you gone long with the initial move above the 50-day moving average, you now have a 19% gain. Had you then gone long with the move over the 200-day moving average, you now have a 17% gain. Had you gone long on the retest of the 50-day moving average, you now have a 14% gain. Had you gone long on the golden cross, you would initially have lost money, but still, since the thing did not reverse cross, you still have 11% gain if you just use 50-day moving average. If you bought the December test of the 200-day moving average, the United States dollar, you also have a 9% gain. So overall, people tell you to be short the dollar. However, wait to be short it. But for right now, the leader is clearly gold, silver, and platinum, but just by looking at the relative strength lines. So I'm going to go ahead and wrap it up there. This is Josh Hayes at BigWayTrading.com. Aloha.